Hey guys, Zach Adams here, your favorite broker owner for Mortgage Matchup, and we're going to do 10 Q&A questions today.
So, what is the minimum credit score to buy a home?
Well, you can start at a 580 credit score. That would be an FHA loan with 3.5% down. If you have a 620 score and up, we have programs as little as 1% down that we can do for you if you're 620 and above. But it really just depends on the scenario. Even if you're below one of those thresholds, we do have some credit upgrade programs that we can, game plan and help you get to ahead of time before you're ready to start that home shopping.
Perfect. How much money do I need to buy a house?
Well, if you're talking about specifically your down payment, it would come off those parameters. If you're talking about like qualifying for a specific home, that would go off of your monthly payment. Now, there's 1,000 different programs out there, and we have all types of ways that we can customize it for your specific needs. But a generic answer would be about 50% of your monthly income minus debts is allowed to go to your home purchase.
What about down payment? What's the smallest down payment I can have?
Well, the smallest down payment is if you're 620 credit score and above, I can do 1% down. If you are buying a USDA property or you're a VA eligible benefit, then we can do 0 down.
Got it. Should I wait for the interest rates to drop?
That's an age-old question, and again, I'm going to go off of my personal belief here. I say marry the house when you find that home that you want, and it's your home. You marry that house, you own that house, that's yours. You date the rate. Rates are a little bit higher than everybody wants right now, and we all know that. The Federal Reserve at some point in the next year is going to start lowering our interest rates. So you go ahead and buy that home now. Yes, your interest rate is slightly higher than everybody wants it to be, but there are things that we can do. We can do temporary buy downs if we get seller concessions or builder concessions to alleviate that for the next couple years. But then again, we're all going to refinance once rates drop in the next 12 to 24 months.
What's the difference between a pre-qualification and a pre-approval?
Okay, so a pre-qualification I can do for you literally in a couple minutes. That's over the phone. I'm not verifying any data. I'm just taking your word for whatever it is. Like, hey, this is my credit score. This is my income. Well, hey, based on what you're telling me, I can pre-qualify you for this amount. A pre-approval is where you actually submit your loan application. You provide the actual income documents, tax returns, all of those things. We submit that in and get an underwritten pre-approval that's already through underwriting, which allows for a quicker close, and all of your information is verified, so it is a real approval.
Got it. And sellers, I'm sure, will take that more seriously.
Absolutely. A pre-qualification versus an underwritten pre-approval carries a whole different weight from sellers. On that same note, if I have a pre-approval for a customer, I can close in 10 days or less to compete with that cash offer. So you have the same benefits of closing quickly, so all you got to do is beat them on the actual offer amount.
Can I buy if I'm self-employed?
Oh, absolutely. A lot of my niche market coming from luxury and exotic cars is dealing with entrepreneurs. People that don't like to pay all of their taxes. They write a lot of things off. So, they may make X amount of money, but their taxes look like they make a different amount. So I have plenty of programs, whether it's bank statement loans or other ways that we can justify and show their income to be able to get them into a home as opposed to just being your regular W-2 employee.
What's the biggest mistake buyers make during escrow?
Well, there's some serious no-nos. You definitely don't go take on a bunch more debt once you've got your approval and you go into contract on a house. You don't go buy a car. You don't go ahead and buy the house full of furniture. You close on your home before you make any of those types of purchases.
What about changing jobs in the middle of escrow?
Oh, you absolutely do not change jobs in the middle of that. Like you either are going to be moving here and relocating, and we know ahead of time you've got a new job and we've got your job letter and your previous income, and that's all done ahead of schedule. But you certainly don't, hey, we're in the middle of this and I'm going to change jobs now. Like, that is the quickest way to end your mortgage.
Great points. What's the difference between a jumbo loan and a conventional loan?
Okay, so a conventional loan is under the $806,000 threshold. Anything that's above that financed amount is technically considered a jumbo loan, which is a non-QM loan.
What are creative ways to win in a high interest rate market?
Well, there's a lot of things that we can do. One of the best things that we've done over the last 2 years is for clients to be able to get whatever they can, and especially with more inventory, like have it leaning towards a little bit more of a buyer's market, to be able to, as opposed to just getting a discount on the home, to ask for seller or builder concessions. What we can do with those is actually buy their rate down, whether it's a temporary 3-2-1 buy down, a 2-1 buy down, or an actual overall ARM or permanent 30-year fixed buy down. We get them the lowest rate option available that we can buy that down to in the best program that's fit for them. And again, even in doing that, we know as rates come down, we're going to do a permanent refinance for them when there's normal rates again.
Is it better to put 20% down?
So 20% down is a fantastic option if you have it. That avoids you from having to pay mortgage insurance, making you have a higher payment. So if you have the ability to put 20% down or more, I would definitely do that. You're paying less interest on your loan amount, and you're not paying mortgage insurance. But if it's something that's not an option for you, in my opinion, it's definitely better to put less down, even if it's that 1 or 3.5%. And getting to a home that's going to build you some type of equity and some, give you financial gain, as opposed to paying 100% interest on rent for someone else.